Hello, everybody. My name's Troy. I'll be leading the webinar this evening. We'll get started here with the technical analysis. Before we get going, let me get a quick okay in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. Looks like we're up and running fine. Thank you. I've got enough responses. Hello, Nico, Saeed, and everybody else. Some nice movements on the charts. There's been some nice breakthroughs, some predictable movements that would have worked well from what we looked at Friday last week in the webinar. Some of those movements came to fruition in a big way. So we'll take a look at what's happened through the day today. We'll look at a little bit at the fundamentals as well before we get going on the technicals. So we have an idea of what's driving some of these movements. Those of you that are purely technical traders, you really don't care what's moving it. If you're just doing the technical strategies, those would have been working very well today as well. Keep in mind as we get going, all investments have risk. No one trade is guaranteed to bring profits. What we cover, keep in mind, is meant to be educational in nature, not to be taken as financial advisement. You can read our full risk disclosure statement on AvaTrade's main website if you'd like to. Keep in mind, if you're using the AvaGo app, and if you haven't, I suggest checking it out. Put it on your mobile devices. It's AvaTrade Go. You'll find it in your app store. You'll also find a link on our website for it. There's a nice feature for times like now with the volatility that's been going on. AvaProtect is a nice feature on our AvaGo app. You can use it to trade on your MT4, MT5 accounts. And it's got a feature called AvaProtect that protects against losses for defined periods of time that you can choose for a small premium cost. So very nice feature. You should check it out. It's available on gold, silver, and most all the FX pairings. Let's go ahead and move forward. What exactly is technical analysis? Before we move forward, get on the charts, we'll just do a basic discussion here. It's looking at the historical movements on the charts, looking for patterns, repetitive movements that might make the future movements predictable. And while the historical movements are no guarantee of future movements, they do tend to be predictive in nature. And we'll take a look as we're looking at some ideas on the charts, technically speaking. You'll see that it's not just a coincidence. Many of these reversal points, breakthroughs, the price levels, it is something that seems to be, statistically speaking, something that can help you out, okay? And so another part of technical analysis beyond the manual methods of finding price levels, drawing lines, trend lines, this sort of thing, are indicators. And many of you may use indicators from time to time. Some have their favorite indicators. One thing that I would say is I would learn to understand to read the candlesticks manually, okay, with manual methods of technical analysis, then use the indicators to help you maybe pinpoint entry points that you prefer once you understand how to read the technicals yourself. And then what you'll find out when you combine the fundamental news with all of that is that the indicators tend to be right in ranging markets where you have equal movements up and down, up and down. Indicators are great at telling you when things are overbought and oversold. But then what you start to find is when movements are trending in one direction, like through an entire day, indicators tend to only be right mostly in one direction and throwing you false signals in the opposite direction. And so if you start to combine your manual methods of technical analysis and fundamental news along with use of indicators, this tends to work out best. So the teacher in me tells me it's best to learn how to read the charts yourself, manual methods, which is what we do in the webinars, and then add the indicators later as kind of icing on the cake when you understand the limitations of the indicators, and that depending on the circumstances, indicators might only be good in one direction that day or both directions, okay? As we go along, please feel free to ask questions. We're first going to take a look at some of the fundamental news and also give input. If there's something you want to share with everyone, it certainly can be helpful. All right, so I like to do this all the time at the beginning to show how easy it is to get a feel for what direction you probably could have been trading throughout the day. And I'll tell you, this morning it looked the same. Okay, the futures have been green all day. Okay, starting from the time the market opened, early morning or late night, depending on which way you're looking at it. Futures were green. All right, so it was expected as the market opened in New York that the non-futures, the regular indices, were going to gap up and be in the green, and that's exactly what happened. Okay. Another thing to notice is that the VIX index, which is the volatility index, or some refer to it as the fear index, has been down all day, including before the markets opened New York time. So during the futures market, the VIX index was in the red, which means fear has been dropping throughout the day and as the day opened. And so it makes sense that futures were green, indices, stocks were rising at the same time that fear was dropping. Okay, when we tend to see that. So right away, within just a minute's look, you can get an idea of the sentiment of which way maybe you prefer to trade on certain assets. Okay. And one caveat with this, usually when fear is dropping, safe haven assets like gold tends to drop. Okay. There's been the opposite relationship ever since this pandemic with gold. And we'll talk a little bit about that as we get on the chart for gold and look at the technicals. And we talked about this last week, and exactly what we talked about happened. Okay, with the futures in the green and fear down, gold went up. And you think, why is gold rising when fear is down? And we'll get into that in a moment. Okay, so a quick look at the headlines. Wall Street stays higher. This morning it was talking about the futures being in the green. It was obvious what was happening through the day. S&P 500 set to recoup $1 trillion in value as virus deaths slow. Specifically, they're talking about, now they're predicting, this is what they think, right? It's going to recoup $1 trillion in value. Don't say that this is a guarantee or something. This is the person who wrote this article feels that way. But you can see what happened today. Dow Jones jumped over 1,000 points right into the open and through the open today, and the S&P 500's on a rally, NASDAQ's on a rally, German indices are on a rally, the Nikkei is climbing, etc. So virus deaths, the increase in deaths has dropped in New York. They feel that they've come over the peak and it's on its way down. Okay, other areas like Detroit maybe hasn't gotten to that point yet in the US, but people are starting to see the light at the end of the tunnel. Some of the testing methods have improved. They've now got tests that don't take 2 or 3 days to get results. They have tests that take like 5 minutes to get results. Tests now not just for if someone has the virus, but if they've already had it and have immunity to it. They have immunity tests for it now that are pretty much instant. So with these tools, people are really starting to believe, hey, they'll be able to get people back to work. If you've already had it, it'll show the antibodies in your blood with a short term, with a test that can be done with a pin prick on your finger. Drop of blood, 5 minutes, tell you if you've had it, if you're immune to it. Obviously, you could go back to work. If you're immune to it, you can't get anyone else sick and you can't get yourself sick. If they test you and you don't have it, well, then that's obviously peace of mind for people as well, that they can't spread it if they don't have it. So these tools are starting to come around, and you start to see deaths kind of tapering off in areas like New York. That's the reason for the market rally today. If you go on to read this article, that's what they're saying. A lot of positive sentiment because of that. And you can see it in these numbers here. Even if you didn't know why fear was down, you can see right here, VIX index is in the red, futures were in the green. You knew fear was down. You knew sentiment was positive. If you want to look at why, you start to read the headlines, you can see it. Okay, easy to see what's going on as you read the headlines. There is some fear out there still, though, in terms of jobs. There's a survey here that says U.S. consumers fear for jobs, debt payments due to the coronavirus. That's obvious. It makes sense. People are a little bit nervous about their future in terms of not necessarily just their health, but talking about their financial futures. So a bit of mixed news, right? And that brings us to the charts then. Let's take a look on my demo. And we might as well start with gold since it's the last thing we talked about Friday, and my chart was still up with my lines that we drew Friday. So let's take a look and see what's going on. Here were the support and resistance levels we drew during the webinar on Friday. And we said, listen, it's ranging and it's going to break out one way or the other. We drew lines down saying you could trade down. It tested the support. Anyone who sold in the range made profit, and then it bounced up off the support and eventually broke the support. We talked about two types of pending orders that would give you an opportunity to take advantage of these movements. What kind of pending order would have bought as it broke out of this range? This line that we drew here, up here, when we said if it breaks through far enough, you get in on what kind of pending order would have bought? Once it broke where we drew this line, 1624, 1625, once it broke above that, what kind of pending order would have bought on gold there? Buying from a higher point. A buy stop. Good, Nicholas. Buy stop. Dominique, you're on. Courage and many other people. So the buy stops would have paid off. Okay. Here it went. Simple technical strategy. When it breaks through the resistance far enough, you assume that there must have been a big change in the fundamentals causing that breakthrough, and you get in with a simple technical breakout strategy. Okay. And so we drew these lines saying you could have a sell stop at the bottom or a buy stop and a buy stop at the top, and you wait for the range to break out. Okay. It broke out on top. A buy stop would have paid well. Okay. Even getting in at the higher point after it broke through the resistance, if you got in at 1625, it's at 1650 plus. Right now, it's $25 per ounce gain in the price of gold. Okay, so before we get into why do we think gold went up, let's just talk about the technical strategy. Very simple strategy would have paid off from last Friday. I know many traders who set up those pending orders. As long as you had your stop loss far enough back below, you didn't get tricked on this little dip back down, and you're in with a nice profit. Many times the strategy that I talk about is once you get in on the breakthrough, your stop loss could be not just below the first support, but below the second one. So take a smaller trade so you can stretch the stop loss further to get through two levels of support. So it broke through the resistance here. Even if you got in here, where it broke through the resistance, you got in on the buy stop, and then it dips back down. It didn't break the second support level down here where the sell stop would have been activated. So you were still in for this ride up, even if you were in before it made the main run. Okay, and if you're confused by that, ask. But I've talked about this even last week. We talked about it. Widening the strike zone. Get in on the breakthrough. In this case, it would have been a buy stop. Even if you got in on this early breakthrough, you're in on the buy. Then your stop loss isn't just back below the breakthrough level, but below the next support level, meaning you're not going to get caught on a false dip back down before it rises further. Okay, it happens many times like that. It breaks through the resistance or the support, dips back down after it activates your buy stop or your sell stop. Dips back through that support or resistance, but not through the next one, and then continues up. Okay, and this was a perfect example of where widening your strike zone, even if you got in on this first breakthrough on a buy stop, it dipped, it never broke the next support level, and up it went. Okay, very simple strategy to carry out. And so your sell stops would never have been activated down here, never broke below the support. And so that would have been 1 out of 1. That would have been a nice payout. Now we could talk about why is gold climbing? And some people care less about that. This is a technical analysis webinar. Those of you who are purely technical traders, you won on this and you didn't care why it rose. You just know that it broke through the resistance. You got in on the buy stop. If you had a nice wide strike zone on your stop loss below 2 support levels, you're still in and you're up nice. Okay, those of you who want to know why did it break through, the fundamental side of things, listen, usually gold is a safe haven, right? People are buying gold as there's bad news on the market, and they're selling gold when there's good news, okay? And that happened for a long time. As there was bad news on the market, gold went up from 1,200 an ounce last year to 1,300, 1,400, 1,500, 1,600 an ounce, 1,700 an ounce, right? It was really rising. When this global pandemic situation kicked in, that was where people saw a potential complete market crash coming, and it was really happening. And so why do people buy gold as a safe haven? For times of crisis, so they have something of value to get cash out of. And so when it was viewed that it's not just bad news, and so let's buy gold and gold's going to go up in value, when it was viewed as a total global economic crisis, people wanted cash in hand. That was it. That was the time they were going to cash in their safe haven gold to have cash, because you can't keep your business open, can't pay your bills with bars of gold. You need some kind of liquidity. And so gold has actually been dropping with good news. Was actually going up now with good news, as people say, okay, I feel safe to take the cash out of my hand. There's enough good news that I want to buy gold again, because I don't think it's a total global collapse right now. So I'm willing to buy my gold back and hold it, because the bigger picture looks like probably some poor factory numbers, some poor GDP numbers, some poor unemployment numbers, etc., in the works for the coming months. And so those types of poor economic numbers that are expected after this pandemic kind of dies down, that's what people are viewing bigger picture. Now's a good time to buy gold again, because the fundamental news is likely not to be so good for China, even though the virus is under control. They're expecting this quarter, even the next quarter, probably to be somewhat bad news. And so with good news right now, people are willing to take the cash out of their hand and buy gold again, which is kind of opposite. Usually people sell gold with good news, but the bigger picture view is bad news for global economy. The short-term view is, hey, it's safe to maybe purchase gold again and get the cash out of my hands, because I think things are at least stabilized enough not to be a total crash for everything. And let's buy gold, because probably tough times are ahead for a lot of the major economies around the world. And so that's kind of been the bizarro world right now, with gold climbing with good news, which usually is not what happens, and gold dropping when we see bad news. Okay, eventually that'll flip. Once this whole crisis ends, we'll go back to something that's more normal, where with bad news, gold goes up. And the bad news would be, bad jobs numbers, production numbers low, PMI numbers low, the normal bad news. That'll drive gold up, right? But global pandemic bad news, that's been driving gold down, because people then say, I need cash in hand. Type okay if you're with me on that. Or if you're confused, ask your questions. Yeah, Dion, many believe gold hasn't reached its highest point yet in terms of the near future coming year or two, okay? I've heard numbers thrown out there, 1,800 an ounce, this sort of thing. Certainly, if this pandemic ends, the fear of a total global economic collapse goes away, and then people just start to say, hey, the economies are doing bad. Certainly that could create some bullish pressure on gold, could drive it up higher than it was back when it was hitting 1,650, 1,700. Obviously no guarantees on that, but this has been the general trend. Yeah, Ronaldo, there you go. Many governments selling gold to prop up markets, that sort of thing, to have cash to give out, right? All right, great. So there we see gold climbing. You know, NASDAQ, Dow Jones, S&P, other indices all around the world reaching great gains today, and there goes gold up. So it's exactly what we're talking about. We see it happening live in front of us. Okay. Yeah, Visan, I hear what you're saying. Yeah, people need cash. Sometimes the only place to get it is to sell their safe haven if things are that bad, which then causes the price to fall. That's exactly what we're talking about. Good. Okay, so what about oil? This is interesting. Let's look at the technicals on that. We talked about setting breakthrough levels last week on oil as well. This was before the Trump announcement that, hey, he's brokering a deal between the OPEC nations and Russia to have production cuts. So we were drawing lines down here last week, okay? These resistance levels saying, hey, pick your spot. If it breaks through those resistance levels down around 22, 23, we were drawing them at different levels. We talked about maybe this gap here. If it breaks above this gap, we said there must be good news, okay? We might have even looked a little higher and said, you know, this support level up here that was broken from back a ways, if we go to 4-hour candles, we said this gap here, if it breaks above, I'm sorry, back here, this gap on 4-hour candles, we were saying if it breaks above that gap, maybe that's a sign of must have been some really good news. And the whole point is you don't have to know what that news will be or when it will be. You look at the technicals, you see the resistance levels, and you draw your lines. And then when we zoom back in, we say, okay, it broke this resistance level, this gap mark here from the prior week. It broke above it. Again, what kind of simple pending order could we have had above that resistance level just in case good news came? And we kept talking about last week and the prior week, if OPEC and Russia come to a deal, what do you think will happen? And everyone said gold will probably go flying up. We all said it, okay? And we talked about what kind of pending orders, and you guys are typing it now, buy stops. We talked about finding the resistance levels. Right here's the resistance level, right? Here was the old gap down. If it broke above there, we were saying you could see a breakthrough candle. And what happened? It broke above, it held support, and there's our breakout candle, okay? It rose in a matter of 1 hour, $4, $5 a barrel. That was it. That was the spot. If you had a pending order above this resistance level, a buy stop, it broke through. Your stop loss, if you had it down below, it held and up it went. A one lot position paid like $5,000 on that one breakthrough move. Okay, easily profiting in a short period of time with a simple technical strategy. Okay, very small risk to have your stop loss back on the downside. If you're widening the strike zone, you might have put your stop loss not just back below this resistance, but back below the gap, in which case then you had to take a smaller trade. If you didn't want to overexpose your account and you're going a little further back with your stop loss to widen the strike zone, then that's okay. So instead of profiting maybe 5,000, you profit 2,500 or 1,000 on that breakthrough move. Obviously, depending on your balance and the trade size that's appropriate for you. So time and time again, as we go through these movements each week in the technical webinar, we see these strategies work, okay? You just have to be patient. You have to be selective with the entry points on these pending orders and patient. What other assets would you guys like to look at? Gold and oil. Well, before we get off oil, let's take a look at, well, what do we think is going to happen next? What happened to the meeting that was supposed to be today between Russia and OPEC that Trump was trying to broker to get them to meet? Yeah, delayed until midweek, something like that. So that's why we saw oil push back down a bit. So let me remove these lines off the chart and let's talk about a strategy moving forward. All is well and good that, hey, this is what you could have done. Let's look at what could you still do. Okay, so we see the gap down here. It gapped down here at open. Why did it gap down at the open today? Because the meeting was postponed, right? It almost filled the entire gap, by the way. That's a strategy you can trade with. When the market gaps, if it starts into a reversal of the gap, if it re-enters the gap, instead of breaking to a new high or low, you trade to fill the gap. And once it fills X% of the gap, depending on how greedy you want to be, you take your profit, because many times once it fills some or most of the gap, then it returns back to the open price, which is exactly what it's been doing today. It gapped down, it filled a large percentage of the gap, and now after filling the gap almost completely, it's worked its way almost back down to the opening price. Okay, so right now it's ranging between Friday's close and today's open. Okay, we'll take a look at the Euro USD in a moment, Charlie. So yeah, Thursday, Dion, I think you're right. Thursday is when they're tentatively talking about having a deal, and it seems like they're going to have a deal in place, and that these cuts aren't going to necessarily just be small. Seems like there may be quite the production cuts here, and the U.S. might be involved with also having cuts of their own. That's kind of what Trump, I think, talked about, that got Russia to the table. So it could be quite significant for the oil market, which is why we saw the climb up above 30 and now or near above 30 and now back down a bit. So it's ranging between these two levels. So it makes sense to me. A ranging strategy between now and Thursday. A ranging strategy between now and Thursday. If the movement gets down to today's open, if the movement gets down towards today's open, what kind of pending order could you have ready off this support line? Off this support to get a bounce if it drops to today's open price? Is that a buy limit or a buy stop? Yeah, Dion, it's a buy limit. Exactly. Ronaldo, buy limit. So if this returns to today's open, you're looking at a potential bounce off the support. You obviously could also back that up with a sell stop below that in case it breaks through, with your stop loss somewhere down this way on the buy limit. So you could bank for a bounce up off of today's open, stop loss somewhere down here with a sell stop ready to go. And then if this returns to Friday's close up here, a sell limit off of the high point from Friday before that gap down into today's open. Why should it break the high from Friday without a deal being signed yet? It reached that high when everyone said, they've got a deal, they're going to sign it Monday. It bounced up to that high. It gapped down because they didn't have the deal yet and because it was delayed. So if it returns to this resistance point then up here, the fundamentals might be on your side to have a buy or a sell limit to sell off this high point. Now, obviously, you could be wrong. If it breaks through, you don't have to risk much. If this is your entry point, technically speaking, your stop loss can be up here above that high point. And you obviously then could also, in case breaking news comes out that, hey, they signed a deal before even Thursday unexpectedly, if something like that happened, oil could easily break this resistance then, and you have a buy stop to back up the sell limit. Okay, so in this case, you're looking at the price levels, you're setting pending orders to go with what you know and preparing for the unexpected that could come. Yeah, exactly, Dion. Something new coming out that if all of a sudden they say, hey, we're going to have 15 or 20% production cuts, if it's something more than what was expected, it could blow right through this resistance, which is why your sell limit would be restricted potentially with a stop loss up above this resistance and a buy stop backing that up for another potential breakthrough that could look like this one. This breakthrough here could happen again. You only need to be right like once out of 3 or 4 tries when you're risking With that type of technical entry point, only a small amount, in this example on a potential sell limit, your loss is a lot less than what you could potentially make when you have breakthrough candles like that. Okay, so I think potential for nice ranging until new information comes out. So you have potential for ranging between these two levels. So the limit orders make sense here. And then if you have a breakthrough, you've got it backed up with the stops, buy stop and sell stop for the unexpected news. Okay, so in this case, you're not trying to be right, you're just trying to be smart. And what we saw work from last week is exactly what we're proposing now. Same strategy. And we see on the charts that indeed it would have worked last week. If this week it doesn't work and you get spiked out, your sell limit kicks in and it comes up and hits your stop loss, your buy stop kicks in and then it reverses and hits the stop loss again. That happens. Can happen. Okay. What you might do is, like I said, widen the strike zone, take smaller trades on a breakthrough on a buy stop. You could have your stop loss not just below the first level that it broke through, but your stop loss could be below that next support level. If it breaks through on the way down, your stop loss could not just be back above the broken support, but above this resistance up here as well, so that you lower the likelihood of a false signal coming back up, hitting your stop loss, and then it continues. Okay, so courage the fact that that happens a lot, then you understand what I'm saying. If you get a breakthrough, your buy stop kicks in, many times it'll test back down and then go further. Okay, so don't have your stop loss so close that these false signals necessarily are going to get you before the big movement continues. So that's the idea of, if you have to, take a smaller trade. So when your buy stop in this example kicks in, your stop loss isn't here because you don't want to risk more. Take a smaller trade. You can have your stop loss down here and risk the same amount. And now those false signals hit you less often. And you can be more patient and wait for the bigger picture to kick in that maybe you feel is true. Okay. Very, very hard lesson to learn, but very nice once you've mastered that idea of widening the strike zone a bit, maybe compromising and saying, listen, I'll take a smaller potential profit, but now my likelihood of getting hit on these breakthroughs and the little wick that comes down and then it continues, you lower that likelihood of getting caught on those false reversals. Okay. All right. How about, let's look at the Nikkei. We look a lot at the U.S. Assets. Let's look here. Look at this. For anyone who doesn't believe in technicals, all right, look at the spot that this climb stopped today. All right. And look at the breakthrough candle here. Resistance, this is going into last week. Resistance, resistance, okay? We saw it ranging. Here's the support down here. We looked at this last week. We said you can put your buy stops above that resistance. You don't have to try and be right. You don't have to guess which way it'll go. Put your buy stops above that resistance. Put your sell stops below it down here, okay? And so as we put those in, we see support, support, it never broke. Your sell stops wouldn't have kicked in. Resistance, resistance. Here's the breakthrough. Your buy stop kicks in, and look where it stopped climbing. Predictably at the next resistance level, right? It stopped climbing at the next major resistance. Here's the resistance, resistance. It reaches the resistance and goes sideways. So not only did you know where to get in based on technicals, you knew where to get out based on technicals. The resistance was right over here. You could see it. So breakthrough, you could have gotten in at what, 18,180. Resistance, and let's be honest, the first resistance is this one, this old support, support, support. And here's the breakthrough down. So if I would have gotten in on this breakthrough here at 18,000, let's say 125, you might have gotten out at 18,500, which was this first resistance level here. So if you were a scalper, you made about, oh, I don't know, 400 point climb there on the Nikkei. That's a nice little scalp, 400 points without having to do anything more than have a pending buy stop above this resistance from last week. We looked at it Friday, and a pending sell stop below the support. Okay, this one happened to break through on the upside. There it went, your buy stop kicks in. Soon as it consolidated at the first resistance level right here, 400 points up, you could have taken your profit. Now it broke through further. Okay, I'm going to be fair here and say I probably, if I was scalping, would have taken my profit at this first level here. Now it did go another 250 points up. Great. If you're in on that, congratulations. Okay, so now we're at a resistance level. Maybe some of this excitement wears off. Pure technical trader would say, hey, we're at a resistance level. It's respecting the resistance. I'm going to do a market sell, take my profit at the first support level, which is right here. Okay, so that would be about 200 point potential profit to the next support level, risking what, maybe 50 points to get above the resistance. If you're putting it just above the first resistance, that's a 4-to-1 potential profit to risk. Not bad. And again, what can you back it up with? Buy stop right up here, just in case there's some unexpected good news and it breaks through. At some point, resistance levels will hold, right? Because there is a global pandemic still. There are major economies all around the world shuttered up still. So it makes sense maybe to trust this resistance, to go after a sell position here. Makes sense that you might go after that. Edward, you're saying it looks like a pattern that you recognize. It certainly could be. If we zoom in, 15-minute candles, you can see the resistance, resistance, starting to downtrend, to take a shot, to sell, take profit at this first support level. Stop loss just above the first resistance. It could be worth a shot. It's a 4-to-1 risk to reward basically there. If you don't like it, you don't trade on it, right? Scalpers love that type of thing. If I go to 5-minute candles, you see resistance, resistance. It's trying to work its way potentially to back down to that support level down there. 1-minute candles, we see the downtrend started, right? High points have been getting lower. So as we zoom in on the 1-minute, 5-minute candles, we do see the downtrend. 1-hour candles, we see the potential for this to come down to the next support. But in any case, always managing our risk in case we're wrong, being ready for the unexpected fundamental news that could cause a huge breakthrough with a buy stop up here. In which case, your next resistance is up here for a take profit potentially, if it breaks through and you get a buy stop running. USD CAD, sure, we can take a look, and I think we'll call it quits after that. Let's go to 4-hour candles. What caused the Canadian maybe to get a bit bullish lately? Yeah, the number one export GDP-wise for Canada is oil. So many times the Canadian dollar strengthens as oil prices go up. And so we can see here the USD dropping against the Canadian. Specifically, a strong drop right here. Okay, USD dropping against the Canadian. And by the way, the USD has been strengthening as an index. The USD index, which is paired against the euro, the GBP, the Swiss franc, etc. It's a basket of currency pairings. The USD has been pretty bullish of late. But you see here the Canadian over the past, from the 3rd, which was Friday. Okay, the USD was strengthening as it had been. And this sharp drop of the USD against the Canadian, that was with the news about potential deal on oil. Okay, so the USD keeps trying to climb, the Canadian pulls it down. USD climbs, Canadian pulls it down. These are 1-hour candles. So there was a bit of a ranging pattern anyways here. okay? Bit of a ranging pattern. And then you had reason as the market opened today, look at this resistance level. It was perfect to sell on the USD against the Canadian, with oil having reason to be bullish. So maybe trusting that this resistance would hold for the USD Canadian, with the Canadian pulling the USD down here all day today. Okay, very nice. It was a very nice movement. If the USD happens to come back up against the Canadian to this resistance before Thursday, that's not a bad sell limit maybe to go after. You might have a pending sell limit up here just in case the USD comes to this resistance level again before Thursday, and you can put on your pending order good until, you can put the date that as long as it's before the news breaks later this week on a potential deal between OPEC, Russia, and the US maybe, this might be a nice entry point to go with the Canadian to strengthen again. If you can get a spot up here, because of the fact that you might expect oil to go up with that type of news later in the week, which then helps the Canadian typically strengthen. Edward, it depends. Depends. You know, if you trust this support level down here, you could trade up from it. But why would I not want to trade up off this support? You know, if I get rid of this line, give me 1 second, delete. If I draw a straight line across, that is a nice support level. Support, 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 support. It's near the support. Why buying up off this support might not make sense fundamentally? Because of the oil news. The Canadian has reason maybe to even break this support level if there's going to be a deal on oil. So I might, if I believe that fundamental news will continue to strengthen the Canadian, I might set up two different pending orders. A sell limit from up here and a sell stop if this support level breaks. Okay, a sell stop if the support level breaks from down here. Okay, all traders are different. A purely technical trader would buy off this support right now and put the stop loss below the support. Okay, purely technical traders don't care about fundamentals. They see that support level, they're buying, right? I tend to use technicals with fundamentals, and I don't like to go against the fundamental news just because there's a nice technical entry point. So I'll wait for the breakthrough if it's going to happen and have a sell stop here. You can disagree and you can do a buy off the support level now, right? I'm not here to tell you what you should do, but at least you know the information. You know the fundamental news has been good for the Canadian. That's why it's sitting on a support level. It pulled the USD down because the news was good for the Canadian. If you believe it'll bounce back up, trade on it. If you tend to like to match your fundamentals and technicals, you prepare a sell stop below the support and wait. And you prepare a sell limit in case it comes back up, just in case. Okay, good points and good questions. All right, everybody, I think this is a good place to stop. Any questions, comments before we end things? All right, great, everybody. Thank you for joining. We'll take a look at these movements on Friday if you can make it back. If not, you'll see the recordings on our YouTube channel anyways. You can check out Friday's session by Monday. It should be posted. But I suspect we'll see some nice movements and breakthroughs on the assets we just looked at. Okay. Prasad, you typed a long question. Let me see if I can get to it before we end things. Yeah, okay, Loveth, the recordings are on our YouTube channel. You can find them, you can keyword search on YouTube, AvaTrade channel, you'll find it, and there's a section for English webinars. Let me get to Prasad, your question. Oh, you're talking about spread changes. Spreads vary with volatility, okay? And so the more volatile the market, the wider spreads tend to get. And that's coming from our feed providers. That's not an AvaTrade thing, right? It's all brokers across the globe as the feed providers, and there are several of them out there. as the market dictates that the spreads are wider, then that's passed along to us, and we pass that along to our clients. And so it's not something that we have full control over in terms of widening and tightening of spreads. The brokers obviously have some option to keep the spreads tighter or wider, but when you have regulated brokers, they're not hoping people lose in order to make a profit. Regulated brokers are profiting off of fair spreads and fair overnight interest, right? And so if the spreads are widening from those spreads that the market are giving the brokers, in order to stay to that business model, then brokers also have to widen spreads temporarily. And they tighten back up as things calm down. It's part of a fair marketplace. Good question. Leverages, yes, another good question. Everyone should be aware of that. Leverages can be adjusted by brokers, including AvaTrade, as markets dictate. Meaning, if things are highly volatile, sometimes you'll see leverage lowered on assets like gold or oil to help protect, number one, clients from taking position sizes that are larger than maybe they should be with such volatility. If they don't realize how volatile it is and they fully leverage a position with high leverage, they can blow their accounts quick. Okay, some of you have probably experienced that. So by the broker, by AvaTrade specifically lowering leverage on certain assets during high volatility, it makes it so you can't over leverage your account so much on individual trades, and protects you in that way from getting overextended on a position. And then at the same time, it protects AvaTrade as a broker from clients over leveraging and then over leveraging the broker as well. Because remember, as a hedging broker, we need to take outside positions to go with our clients. If everyone's going in one direction, we've got to find outside liquidity as well. And if the liquidity is not there, then that's a risk to the broker as well. So it goes both ways, controlling risk for clients and for the broker by making sure when there's huge volatility, spreads are adjusted accordingly, and also leverages temporarily are adjusted accordingly. Very good questions and things you should understand. So, if you're using our AvaGo app, as you're setting up your order, you'll see for the trade size you're proposing to take, it'll tell you how much goes to margin. So you'll know right away, oh, the leverage changed. For a trade size I usually take, I only need X amount going to leverage or going to margin. You'll see for that same trade size, if the leverage has been lowered, for example, you'll see, oh, more of it has to go to margin right now. So then leverage has been lowered right now. So that's another good reason to use the AvaGo app beyond using it just for AvaProtect. Okay. All right, everybody, good questions that I think will definitely be helpful for some people as they're managing the risk during these volatile times. Hopefully I'll see some of you Friday. Tell me how you did on some of these potential breakthrough and reversal moves that we're talking about as potentials here. All right, bye everybody. Thank you for joining.